The Finance Ministry has released a list of 101 projects worth a combined 6.61 billion ringgit, which were awarded through direct negotiations under the PH government. Of the 20 ministries that were named in the list, the bulk of the contracts went to the Transport Ministry, with 4 projects worth a cumulative 4.48 billion ringgit. Of the sum, 4.475 billion ringgit was for the Klang Valley Double Track project, awarded to Syarikat Daya Maju LTAT, a JV between construction company Daya Maju Infrastructure Asia and Lembaga Tabung Angkatan Tentera. The other ministries include Defence, Home Affairs, Communication and Multimedia, Education, Housing and Local Government, Finance, Economic Affairs and the Prime Minister's Office. In a statement, Finance Minister Tengku Datuk Seri Zafrul Aziz said contract awards via direct negotiation are allowed, provided that the Finance Ministry gives its approval. This is as long as they meet the criteria under the Financial Procedure Act 1957, revised 1972, and related Treasury circulars. AMMB Holdings, or Ambank, says first quarter net profit was down by 6.7% year-on-year to 365.17 million ringgit on lower net interest and Islamic banking income amid COVID-19 driven uncertainties. Revenue eased 7.5% lower to 2.21 billion ringgit. MBank CEO Datuk Sulaiman Muhammad Tahir says he is satisfied with the group's overall performance, with underlying net profit growing 6.5% year-on-year amid the challenging operating environment. He adds that MBank's costs were well managed, with cost-to-income ratio standing at 49.3%. Going forward, he expects the banking industry's loans growth to be modest, with a flat to 2% growth outlook, compared with 2019's loans growth of 3.9%. But while there will be downside risks, Sulaiman believes they will be cushioned by the introduction of fiscal stimuli and financial measures aimed at supporting economic growth. He says more stable commodity prices, coupled with the current staggered relaxation of the MCO, should gradually improve business and consumer sentiments. The easing of global lockdowns should also help provide some positive impetus to trade and investment flows in the second half of 2020. AirAsia X posted a widening net loss for its latest quarter and says it will need to get its major creditors to agree to restructure its outstanding liabilities. The carrier saw second quarter net loss come in at 305.24 million ringgit versus a net loss of 207.11 million ringgit the previous year. It's still an improvement compared with the first quarter, when it posted a record quarterly loss of 549.7 million ringgit. Meanwhile, top line plunged by 91% to 91.44 million ringgit. AAX has been badly hit by travel restrictions and continues to face severe liquidity constraints. Its liabilities currently stand at 3.38 billion ringgit, up 30.7% from last year's level of 2.58 billion ringgit. Going forward, the carrier expects to remain mostly in hibernation mode in the near term amid the uncertainty over the lifting of border restrictions. It will continue to seek payment deferrals and concessions from suppliers, lessors and lenders, and also implement further payroll cuts in the next month. AAX's shares closed unchanged today at 6.5 sen. Sime Darby Property swung into a loss in the second quarter after the COVID-19 outbreak disrupted all 3 business segments of the company. The builder reported a net loss of 81.77 million ringgit versus earnings of 205.26 million ringgit a year earlier. Quarterly top line shrank 67% year-on-year to 288.23 million ringgit. Sime Darby Property said in a statement the nearly complete lockdown previously had significantly affected the performance of its property development, property investment, and leisure and hospitality divisions. The movement curbs aside, the group said its results were also affected by the write-down of completed inventories to expedite its clearance and impairment of receivables and contract assets. It noted that it also saw gains on the disposal of properties in Singapore in the previous corresponding period. On its prospects, Sime Darby Property says there are promising signs of economic recovery. With its long-term position remaining healthy, the group believes it has the potential to ride on the improved outlook going into the year 2021. Negeri Sembilan-based Matrix Concepts saw its second quarter earnings shrink by 43% to 31.06 million ringgit on the back of lower contribution from its property development segment and investment properties due to the halt in operations imposed under the MCO. Revenue came in 35% lower at 162 million ringgit. It declared a first interim single-tier dividend of 2 cents per share. Chairman Datuk Muhammad Haslah Muhammad Amin points out that despite the challenging conditions, Matrix Concepts recorded 9.3% higher new property sales, worth 350.3 million ringgit, underpinned by strong demand for its properties in Sendayan Developments Seremban and Bandar Sri Impian in Johor. He adds that the developer is also expediting the construction progress of ongoing developments to recover from the productivity loss due to the temporary inactivity during the MCO period. Citing its solid financial foundation, he says Matrix Concepts will be able to weather this period of uncertainty and record a positive performance for FY 2021.